Hey, good day, everybody. Still here for the Daily Market Pulse. This is Thursday, August 14th. So yesterday I'd said not quite sure if we were outside of the correction now and back into a resumed uptrend. I'm going to say officially after today's move for sure. Yesterday it may have already occurred, but certainly today confirms it for me. So up in lower volume, mind you, but we're in a confirmed uptrend. I'm going to put today's data as that confirmed uptrend, even though it could have been yesterday. Everything above 8 moving averages. Everything looks fine and great and dandy, and nice move higher. So there is, let's see, that's yesterday's, and today went even higher. So now you're back into a pivot area, essentially a polarity right below the 20 and the 50. So yeah, there's a dead cross, but now we're seeing the reversal already following the bull sash formation we had a while back. It is overbought, so we may see a little bit of a pullback towards 16,550 or something like that. Back toward the 8 moving average. That's possible. No worries there. But that's what we're looking at. Obviously, the ultimate target all the way back up toward 17,000 plus on the Dow here as well. So the S&P will have similarities there as the bull sash, 1900 to 1920. The window on Monday, the confirmation back to the moving averages, but also the polarity near 1965 to 1970, with an ultimate move into like 1990 or 2000 is what we're looking for a target on the upside. Nasdaq is right into the window, so that's look at the multiple days to the upside. Rising window on Monday, sideways through between the moving averages through yesterday, and then even higher today, 44.50, with room all the way into 45.50 practically at this point. Slight pause is possible into the moving averages again, 8 moving average in particular. The 50 and the 8 would be the likely pullback area, so just watch out for that. We'll take a look at the TSX. TSX is kind of grinding across 15,250. And that's about it with targets higher, of course, 15.5 or higher. Support across this exact goal line right now where it is at the 8 moving average right now. US dollar, Canadian dollar, a little bit of pullback following resistance at 110 into back to 109. Room still to 108.50 approximately. Or slightly lower, and that's what you'll be looking for, a support area to the 200 to 20-day moving average, as well as the 108.50 region for the time being. Oversold in this area as well. Euro US sideways, still consolidating. 134 above, 133 and a quarter below. Nothing real definitive. Trying to hold. It's got to get through 134.50. Ideally be long, otherwise below 133 and a quarter, 133 particularly, you're on the short side. Now markets are higher, but oddly, so are the treasuries. Not necessarily new highs, but very close to the new highs that were established back on the 8th of last week on Friday. At 140, that was the target. Otherwise, you're looking probably at dollar increments on the way up potentially here for treasuries. 139 will be the support below, followed by 137. Japanese yen came off the resistance across the moving average. You had the 20, the 50, and the 200 all clustered together. Came off that, pulling back toward 97.50 and potential support area right through here. That's what we're looking for, a bounce in this area. Look at the lower shadow. Look at the candle formation. That's what we're looking at right now. Gold and silver still look like they want to break out to the upside above, in this case, gold for above 1320 toward the 1340, 1350 area. Silver holding reasonably well near 1950 to $20. Looking for 2050 and 21 above that. Crude was just meandering sideways between 97 and 98 with no real direction and nothing real positive. There's the appearance of maybe some bullish candles, but it just was not able to sustain. And we mentioned if it dropped below 97, we're looking at 96 or lower, and it hit 96. You've got a positive divergence now set, so I'm looking for an actual bounce from here back toward 97 and 98 on crude. IWM is your small caps. Just like everything else we saw earlier with the Dow, S&P, NASDAQ, we're looking at higher prices. Not real aggressive like I would have expected. The NASDAQ's actually stronger. When you want to see aggressive movement in the small caps, we're not really seeing that necessarily, but it's reasonable. But you had a window to go through, which it did yesterday and today. Has another window to go through, which is now at resistance at 114. So you have the 200 followed by the window. And the highs established back on Monday as a resistance area, target area at 114. Then you got room to 115 and 116 on the way up from here. Otherwise, support right below the 20-day moving average, the 8 moving average, and the window from Monday right at 112.50. And we go over the VIX. The VIX fell further into the 50 and the 1250 area, which we had suggested maybe as low as 1150 as well. It's oversold, multiple red candles to the downside. With some of these markets in a little bit of resistance, we're expecting a little bit of a sideways to slightly lower pullback, and we're looking for a slight bounce here as well to sideways on the VIX just the same.